From a small-town bank to the center of a $47 million cryptocurrency fraud, this is the shocking downfall of Shan Haines. How did the trusted CEO of Heartland Tri-State Bank end up in federal prison? And what does it mean for the future of cryptocurrency and finance? Let's uncover the story behind one of the most brazen frauds in modern banking history. The astonishing $47 million heist, how a bank CEO turned fraudster. In a tale that reads like a Hollywood thriller, Shan Haines, the former CEO of Heartland Tri-State Bank in Kansas, masterminded an audacious $47 million heist through an elaborate cryptocurrency fraud scheme. The revelation of this scandal has left the financial world shaken and raises profound questions about trust, oversight, and the evolving landscape of financial fraud. A trusted steward of finances, Shan Haines held a position of immense trust as the CEO of Heartland Tri-State Bank, a respected institution in Kansas. He oversaw the financial well-being of countless individuals and businesses. For years, Haines was the epitome of responsibility, navigating the bank through economic challenges and presenting himself as a pillar of the community. But beneath this facade, he was orchestrating a scheme that would ultimately bring his empire crashing down. The rise of the scheme. Cryptocurrency, a digital innovation lauded for its potential to revolutionize finance, was central to Haines's plan. He leveraged its complexity and relatively nascent regulation to weave a web of deceit, exploiting the bank's resources and his position. Haines diverted funds into high-risk crypto investments. To cover his tracks, he falsified records, manipulated transactions, and crafted a narrative of robust financial performance for the bank. Haines's scheme was not a spur-of-the-moment decision, but a meticulously planned operation. He began by setting up shell companies to act as intermediaries for his illicit transactions. These companies appeared legitimate on the surface, complete with professional websites and dummy accounts. Through these entities, Haines funneled millions of dollars into cryptocurrency markets, hoping to reap enormous returns. The unraveling of the facade. The first cracks in Haines's meticulously constructed facade appeared in early 2022. Auditors noticed discrepancies in the bank's financial statements. Initial inquiries uncovered irregularities in loan approvals and fund allocations. But Haines's position as CEO allowed him to deflect scrutiny and attribute these anomalies to clerical errors or system glitches. However, the digital nature of cryptocurrency transactions left a trail. Blockchain, the decentralized ledger underpinning cryptocurrencies, is immutable and transparent. Investigators eventually pieced together the transactions leading to the shell companies and, ultimately, to Haines. By mid-2023, federal authorities had gathered enough evidence to charge him with embezzlement, wire fraud, and money laundering. The magnitude of the crime. The scale of Haines's heist is staggering. Over several years, he embezzled $47 million, effectively draining the bank's reserves and jeopardizing the financial stability of its customers. Businesses faced cash shortages, families struggled to access savings, and the community's trust in the banking system was deeply eroded. Adding to the intrigue was Haines's lavish lifestyle, funded by his fraudulent gains. He acquired luxury properties, exotic cars, and even a private jet. He hosted extravagant parties and invested in high-profile ventures. Portraying himself as a savvy entrepreneur, this ostentatious display, however, proved to be his undoing, drawing the attention of regulators and sparking questions about the source of his wealth. The trial and sentence. Haines's trial became a media spectacle, drawing national attention. Prosecutors presented a mountain of evidence, including financial records, blockchain data, and testimonies from former bank employees. Haines's defense attempted to argue that he was merely ambitious and misunderstood, but the jury was unconvinced. In December 2024, Haines was sentenced to over 24 years in federal prison. The judge's remarks were scathing, highlighting the betrayal of trust and the devastating impact of his actions on the community. Beyond the prison term, Haines was ordered to forfeit all assets acquired through his fraudulent activities, including his luxury properties and vehicles. Lessons learned. The Heartland Tri-State Bank scandal underscores the vulnerabilities in the financial system, especially with emerging technologies like cryptocurrency. Haines exploited the lack of understanding and regulation around digital currencies, highlighting the urgent need for robust oversight mechanisms. For the banking sector, the case is a stark reminder of the importance of checks and balances. No individual, regardless of their position, should have unchecked authority over financial transactions. Enhanced auditing practices, stricter compliance measures, and greater accountability are essential to prevent similar incidents. The human cost. While the financial ramifications of Heist's actions are evident, the human cost is equally profound. Small businesses that relied on the bank for loans and credit lines found themselves in dire straits. Employees faced uncertainty about their jobs, and customers struggled to recover their savings. The community's faith in its institutions has been shaken, leaving a legacy of distrust that will take years to rebuild. The broader implications. Heist's case also sheds light on the darker side of the cryptocurrency revolution. While digital currencies offer numerous benefits, their potential for misuse is significant. The anonymity and decentralization that make cryptocurrencies appealing also make them attractive tools for fraudsters. This case has reignited debates about the balance between innovation and regulation in the financial sector. Moving forward, for Heartland Tri-State Bank, the road to recovery will be long and arduous. New leadership has vowed to restore the institution's reputation and implement reforms to prevent future fraud. Regulators are working closely with the bank to ensure compliance and rebuild trust among customers. For the wider financial community, the scandal serves as a wake-up call. It highlights the need for vigilance in the face of rapidly evolving technologies and the importance of maintaining ethical standards in an industry built on trust. Final thoughts. The story of Sean Heist is a cautionary tale of ambition gone awry. It reveals the devastating consequences of unchecked greed and the fragility of trust in financial institutions. As the banking world grapples with the fallout, Heist's actions serve as a stark reminder of the need for integrity, transparency, and accountability in the stewardship of public trust. A $47 million fraud, countless victims, and a prison sentence that shocked the nation, Sean Heist's story is a stark reminder of what happens when greed takes over. But the question remains, how many more scandals are lurking in the shadows of our financial systems? If you found this story eye-opening, don't forget to like, share, and subscribe for more deep dives into the most shocking crimes of our time. Let us know in the comments, can the crypto world ever be truly secure?